In this video, I will explain the next big catalyst for Tesla stock, what could really move Tesla, even on Tesla earnings that will be coming out over the next couple of weeks. I believe it's just January 26th, I want to say, is Tesla's scheduled earnings report. And there's a couple things specifically within that earnings report, not the numbers, but the commentary, that could really send Tesla stock skyrocketing higher. And I think there is a much greater chance of a move higher than a move lower because of one thing that is very important to Tesla stock right now. Now, we will go over all of that. I will share a little bit of my perspective on my timeline on what I'm expecting Tesla will do in 2025, where Tesla will end the year. I will also share this clip with you from Canaccord Genuity. They just recently raised their price target. And George Giannis here says Tesla is still a buy despite annual deliveries drop. This video came out yesterday, clearly before the gamma squeeze really started into the end of the day. But we will look at that a little bit later on. Because first we have more pressing things to go over, like the next big catalyst for Tesla stock. And believe it or not, I do think the inauguration could be a big positive catalyst for Tesla, considering Elon and Trump's relationship. I don't see that as being viewed in a negative light anytime soon. I do think that if markets are going to benefit from Trump being in office, Tesla is going to be clearly the biggest beneficiary. Okay? And I actually think following some of the recent fear and selling in markets, again, 65% of stocks are currently in a downtrend. CNN's Fear and Greed Index almost hit extreme fear recently. It's still sitting around the midpoint of fear, even after Friday's rally. There's a good chance that Trump's inauguration could actually be a positive catalyst, that markets might start to actually get more excited about deregulation and less government getting in the way of the private sector, and potentially a consumer that can start to recover a bit, right? Where you actually see the bottom end of the consumer spectrum start to get a little bit better, okay? There's a lot to potentially be excited about with a Trump presidency, okay? So there's a good chance that January 20th could actually be a positive catalyst for Tesla stock and even the broader markets. Now, I want to be clear. It's going to be positive for some areas and less positive for others. I think you could make an argument that it's not going to be as positive for big tech from a tactical perspective, because you've seen a lot of crowding in big tech, and that's why big tech has done so well over the past couple of years, because big tech's kind of the area you would want to be in if all else fails. If we go into a recession, would you rather be in cyclicals or small caps versus big tech? No, you'd rather be in Meta if you go into a recession. You'd rather be in Microsoft, even Apple to an extent, even though they're kind of tied again to the consumer. With potentially the soft landing outlook starting to take hold a little bit more after the inauguration, and the prospect of what I believe will be lower inflation in 2025, lower 10-year treasury yields, lower cost of capital, right? That's kind of how Trump rolls. He likes to keep rates on the low side as long as inflation's not an issue. It's not like big tech won't benefit from that, but they won't benefit as much as cyclicals or small caps, okay? The area that will benefit the most, I believe, will be Tesla. It will be, AI appliers. That's the next leg of this AI revolution. With a strong market backdrop, potentially that could kick up a bit after the inauguration, you could really see Tesla benefit from that. Now, from a tariff perspective, we're so used to hearing about 100% tariffs on China and 25% tariffs on Mexico and Canada. If we were to get something like a 10% tariff on everyone, that would be good news. Okay, so as long as the tariffs are not too extreme, like they were promised on the campaign trail, which I don't think they will be, that was really a lot of talk, I believe personally, then the markets would actually buy the crap out of that. Now, even if we do get strong tariffs, okay, large tariffs, companies will get exemptions. Apple got exemptions during the first round of tariffs in 2018, okay? Tesla will get exemptions also. Now, Tesla's not, they've kind of built out their supply chains where tariffs won't really affect them too much anyways. Certain components, sure, but they've kind of built things out to be a winner in a potential tariff war, right? The issue would be if China responds to the tariffs and, tariffs U.S. companies. Okay, then that could be an issue, exporting things to potentially even Europe, right? From Giga Shanghai. That would be a bigger issue, but that feels like it's down the line a bit before we have to worry about that. So I look at these things and I say, what's the real risk to Tesla? Are the markets maybe a little more concerned than they should be about tariffs and about, the potential negative Trump policies? It feels like we are. And it feels like deregulation and some of the positive Trump policies, less taxation, deregulation, what I believe will be lower inflation and lower, 10-year treasury yields. I don't think that is really being priced in or considered too much at this point. And I think after January 20th, we really might start to look forward to that. That could propel a broader market rally. And when you get broader market rallies, Tesla really just tends to outperform. And I do think the AI appliers will be the big winners of 2025. And Tesla is the top of that leaderboard. There's nobody else that even comes close to taking Tesla's position there. And I don't think any company will for a very long time. Name me something that could be bigger than full self-driving. I'll tell you one thing, and I've talked about this before on the channel. It is gene editing. It is healthcare. If AI evolves to such a point where, we could start editing bad things out of genes and people start to live a lot longer, things like that, that would be bigger than full self-driving. But at this point, besides that, I can't think of anything else. And that's why I own some CRISPR, right? Top company in gene editing. In case that takes off one day, you're covered. So if you think that is going to take off one day, consider looking at CRISPR, right? CRISPR Therapeutics. The stock is beaten down right now. It's a great time to buy. I actually bought a little bit recently myself. Topic for another video. Besides that, I don't see anything else that can hold a candle to full self-driving. Now, looking past the inauguration on January 20th, 6 days after that, Tesla will report earnings. Now, if the inauguration does have a positive effect on the markets, which I see as likely at this point, again, soft landing is going to take effect, positive Trump policies become a reality. These are all, and that's kind of grouping everything in just one category, positive Trump policies. There's a lot of them that Wall Street loves, okay? It's going to become a reality January 20th. And I think there is a lot more room to price in some optimism there. Not in the headline S&P, not in big tech. I don't think we're going to get much multiple expansion in that sense, but I do think the areas that are beaten down can start to recover. I do think some areas like AI appliers, like a Tesla, could really accelerate in that environment. Would I expect Apple's going to go up 20% after January 20th? Or Nvidia, or Microsoft, or Meta, or Amazon, or Alphabet? No, they're already at very stretched valuations, okay? But it could fuel a small cap, cyclical, value, healthcare, AI applier kind of broader market rally, okay? That's why I'm not bullish on big tech next year. Okay, so moving on from that, 6 days later, you have Tesla's earnings call, okay? I don't think the numbers matter at all for Tesla earnings. Now, why Tesla moves so much on delivery numbers is because following those delivery numbers, we can kind of model out what Tesla earnings are going to look like. Okay, it's fairly simple to do. So Tesla doesn't really move based on the earnings, plus or minus like 1% after the report comes out. Pretty common. The big thing that will drive Tesla stock much higher is if guidance changes around robotaxi. I've talked about this on the channel before, but I'll talk about it again. On the last earnings call before the election, Elon said that Tesla would launch robotaxi in 2025 in Texas and in California. Now, obviously, it's going to be a city-by-city thing, but those two states. If Elon comes out and says that Tesla could launch the robotaxi in 4 states or 5 states or as many as 10 states in 2025 by the end of this year, Tesla stock is going to soar higher. That is the number one catalyst for the earnings call. It is commentary around the launch of robotaxi. I think there's a very high likelihood that Elon Musk says, yeah, we've had more progress on FSD than we thought we were going to have. Trump won the election, so it's should be a little bit easier to get robotaxi into different cities. And yeah, we're going to launch in 5 to 10 different states instead of 2. You know how big that would be for Tesla stock? That would be massive. I would be hard pressed to say Tesla does not rally into the 600s at that point. That would be hard to fathom, to not see a rally, into like the 600s. In all reality, let's just be fair here. I mean, to get to $600 per share right now is a 47% rally. If we rally after the inauguration and after that earnings call, it's going to kick off a crazy rally. If I'm correct, if that guidance for FSD and robotaxi ultimately gets moved up a bit, which I do think, okay, even after the election, I said, oh, wait, Trump just won. Maybe this means we're going to get more than 2 states that launch the robotaxi. Now, you've also gotten news recently. In March of 2025, Switzerland will allow autonomous driving software on roads, so FSD can start operations there, and it won't be too long after the United States launches widespread or wide-scale robotaxi, where other countries say, yeah, I want a piece of that. I want you guys to do business in my country as well. Tokyo, Japan, that city, big city. Waymo is launching in Tokyo. I believe it's 2026. They're already going to allow Waymo to launch. How difficult is it going to be for Tesla to launch under the same kind of paradigm, right? Yes, drives need to be monitored by a third party behind a computer screen, blah, blah, blah. Yeah, there's some stipulations that go along with all of it. But could you even launch robotaxi in other countries? Possibly. Chief Investment Officer Keith Fitzgerald says Tesla is headed to a $20 trillion valuation. He says that Tesla today is like Apple's 2014 moment. Take a listen to what he just said.
That's why I say this is very much like Apple's 2014 moment, because the return to scale for Tesla over the next decade is going to be radically different than the return to scale over the past decade. So it is natural, the more digital a company is, the higher the PE ratio becomes. And where that matters from an investing standpoint is you have a whole bunch of people who are screaming and yelling about high valuations who don't understand that's exactly what you want to see when it comes to a company like Tesla, because every customer they add costs them almost nothing, but yet the margins are off the charts. Stuff, PE ratios and price to sales and price to book and blah, 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 blah. It's taught as dogma today, but what people don't realize is that stuff is like bringing a knife to a gunfight. It doesn't work anymore. The only thing that most of the investing public has gotten right about Elon Musk is they've been consistently wrong about what he's anticipating. And so if you're an early investor, if you're a serious investor, if you're a retail investor who understands where you want to go and what you want to accomplish with this stock, I submit the smarter move is to be on board now. Because when this train starts moving, it's going to move so fast that everybody else who's not on board is going to be standing there with their hat in their hand going, oh, what happened? Oh, now what? And then, of course, you can see a bunch of retail analysts come on and say, well, you know, it's great at $700.
Now, take a listen to this clip from Canaccord Genuity's George Giannis.
I really like the journey that you traveled in making this call. You detail it in your report, essentially saying maybe your first instinct when the stock went way past your previous target was to downgrade it, wondering whether the post-election surge in Tesla really was based on anything but vibes about, you know, Musk's closeness to Trump. And yet, you settled on this idea of raising the price target and basing it on huge earnings growth that you anticipate for the company in the next few years. Talk about it.
Well, thanks for having me. So we debate our stocks and our price targets every day. We had an internal discussion with our team, Leanne and Matt and our team. And also I called my director of research, Mike Graham, to go over it and just thinking about what to do with the stock at these levels. And we landed on keeping our buy rating, increasing our multiple, and basing our target on our 2027 earnings. What's interesting about Tesla stock, if you look at the way the stock traded last year, it bottomed almost at the exact same time that year-over-year revenue growth bottomed in the first quarter. And if you look forward, based on our estimates, that year-over-year growth rate should continue to accelerate into next year and beyond. And we're basing that on the new products that we've been promised. Elon Musk has said multiple times that the company should have new products in 2025. Hopefully that goodness impacts 2026 as well. And the company really has a good track record of introducing new products that are compelling, that people get excited about. So that's the basis of our call. And the second really important part of that is FSD, full self-driving. The recent versions have created a lot of excitement online, and it's important for the stock. Forget the cyber cab for a minute. If people decide to upgrade their current vehicles, pay the $8,000, that should create a margin tailwind. And really importantly, it should justify the tens of billions of dollars they're spending on infrastructure to develop FSD. And it's actually a really important broader point, because if Tesla can or can't justify the tens of billions of dollars they're putting in the ground for AI, it impacts not just Tesla, but our entire group. You mentioned earlier that we need energy to power AI. If we can't justify the investments we're putting in the ground, the NVIDIA chipsets, the tens and billions of dollars, that has broader implications for our whole group.
Sure. I do just want to put some more specific numbers on it, though, in terms of how you're getting to the 404 price target. So you're saying 40 times anticipated 2027 earnings of $10.11 per share. Now, that 2027 forecast of yours is basically double the consensus, right? I mean, the consensus, to the extent there is one for 2027, is around $5 a share. So, right. You know, you're kind of, the way I'm reading it is you're saying everything's going right that can go right, and we're going to put a 40 multiple on it.
Well, look, first on the multiple, the group, and we consider the group the mega cap tech stocks, they're trading at 23 times 2027 earnings based on FactSet, and they're growing at half the rate at Tesla, less than half if you consider earnings and EBITDA as well. So yeah, we're assuming that the new products create a tailwind for the next couple of years, but importantly, to your point, we also assume that gross margins get a lot better. Since a couple of years ago, Tesla's auto gross margins have sort of crashed, right? They famously cut prices to keep.
All right, I'm going to go ahead and cut that off now because that was exceptionally bullish for Tesla. Think about it like reasonably. Tesla's trading at 120, what they say, 23 times forward 12-month earnings. If he's correct on a $10 EPS number for 2027 times 123, that's $1,200, $1,230 per share by really 2026. Okay. Now, what happens in the scenario that I'm correct and inflation comes in lower than expected. The Fed is able to cut rates more. 10-year Treasury yields fall, and you could actually see some of these expectations pulled forward a bit. Like, that's why Tesla was a $400 stock in 2021. It was because rates were low, Treasury yields were low. Like, people were extending their time horizons out. Okay. What if Wall Street starts to extend their time horizons out a bit? You could be at my price target, $945 per share by the end of this year. Okay, that is my call. You could be even higher than that. Like, I could be wrong at $945 per share. If the bull case scenario really does get played out in 2025, it has to do with inflation, the Fed, federal funds rates, okay? That kind of just amplifies Tesla a bit. Now, if Robotaxi launches, new successful products launch, and we don't get 2 states this year, we get 5 to 10 states this year. Yeah. You're going way higher than $900 per share by the end of this year, right? I think that's just kind of a baseline target that I think is reasonable at this point. But in the right scenario, you could be over $1,200 per share by the end of this year. It sounds crazy to some people. Some people are going to chalk at that. Some people are going to laugh at that. People were laughing that I said Tesla would be at new all-time highs by the end of this year when Tesla was at $138 per share back in April of 2024. It looked like a new all-time high when Tesla was in the 130s. Was crazy. What happened? We went to new all-time highs by the end of this year. Now it's going to sound crazy that I say Tesla could be a $945 to, you really can't put a target on the upside for Tesla here. That sounds crazy to a lot of people. And it will be crazy to a lot of people until it happens. Now, I think there will be corrections along the line. I do think there will be moments of doubt along the line, like we just had, right? Correction in Tesla. Crash in Tesla. Tesla fell 23% from 488 down to 370 or so. There will be moments like that in 2025 and over the coming years. But nothing changes, okay? And those are buying opportunities. And as, the first clip we seen, as Tesla goes higher, Wall Street's going to move their targets higher. They're going to say at some point $700 per share is a good price to buy Tesla, and $1,000 is a good price to buy Tesla. They follow the crowd. They follow the stock. You want to be ahead of that before it actually happens. And that's where I see Tesla right now. So let me know what you guys think about all of this information down below in the comment section. I know it sounds crazy to a lot of people, but I don't think I will be wrong on this. So that's going to go ahead and do it for this video. Nux. High five. Nux. High five. Say Tesla. Say Tesla. He's working on his T's. Say Tesla. Say Tesla to the moon. She'll say it. Say it louder. Tesla to the moon. Say Tesla to the moon. Tesla to the moon. Yeah. So I think we got the point across here in this video. You think so? You think so? Yeah, you think so, huh? Perfect. So that's going to do it for this Saturday afternoon. Enjoy the rest of your day, and I will see you in the next one.